One of the exciting possibilities that I'll put out there is using blockchain technology, crypto technology, to create better carbon credit markets.
It all changed in the space of a few seconds. Not on social media, not with a tweet, but quietly, on-chain. Chris Larsen, Ripple's co-founder, transferred nearly 50 million XRP over the past 10 days, roughly $175, 200 million. Multiple addresses, exchanges, and right after XRP surged past $3.60, hitting a 7-year high. Then came the crash. 17% in 24 hours. Long liquidations triggered, bullish momentum stifled, and suddenly, the community was asking, was this offloaded at the top? Were retail holders used as exit liquidity? That's where crypto quant analyst Martin weighed in, warning, don't be his exit liquidity. A stark reminder that insider transfers don't happen in a vacuum. But the skepticism didn't stop there. Enter Dark Defender, a well-known XRP analyst. He brought up a similar case. Jed McCaleb, Ripple's former CTO, who sold 266 million XRP in 2020 for just $148 million back. Then, the market feared catastrophe. Instead, XRP held on. Despite the dump, XRP remained one of the top assets, even during bear markets and legal battles. And analysts now say, maybe we should treat this like history repeating, not rewriting. Here's why this matters. Timing. Tokens. Sold right after price peaks, suggesting profit-taking at the top. Scale. Over $200 million now in exchange wallets. And Larsen still holds 2.5+ billion XRP. $8.9b. Pattern. Similar sell-offs this year alone total $500 million plus in insider liquidation, but there's still a silver lining. Despite dropping to $3.08, XRP quickly recovered above $3.20. It's up 3% in the last 24 hours. Analysts are now eyeing ETF filings, Ripple's robust stablecoin growth, and the overall bullish macro trend in altcoins. Some expect a move toward $4 in coming months if momentum returns. The question everyone is asking, can XRP withstand this and bounce back stronger, like it did before? Or is this the start of something darker? What to watch next? Future moves by Larsen. Will more XRP hit exchanges? Volume and long/liquidation data. How deep is this dip? ETF approval. Developments. Could that restore trust? And most importantly, how the community responds. In summary, community skepticism versus long-term optimism. Price rebounds above $3.20. Eyes on $4+. So, is this a safe dip to buy or a sign of the next collapse? The answer lies in whether insiders continue selling and whether the market can regain trust. Get started quietly. On-chain data, numbers, hashes, transaction codes. But beneath the surface, a tidal wave was forming. A wallet, directly tied to Ripple co-founder Chris Larsen, moved 50 million XRP over the span of just a few days, from July 17th to the following Wednesday. That's about $175 million worth of XRP, quietly flowing across the ledger while most investors watched the price charts climb. But then, the market turned. XRP, which had been enjoying bullish momentum, suddenly reversed. Within 24 hours, the token dropped over 17%, leaving traders and holders reeling. The timing wasn't lost on anyone. Prominent blockchain investigator XRP was one of the first to sound the alarm. In a post on X, formerly known as Twitter, he revealed that nearly $140 million of the XRP moved by Larsen's wallet was sent directly to centralized exchanges. Binance, Coinbase, Kraken. When whales move coins to exchanges, it's rarely for safekeeping. It usually means one thing. They're preparing to sell. The crypto community, the signal was clear. Exit liquidity. Another round of insiders cashing out while the retail crowd holds the bag. But the deeper concern wasn't just the amount moved, it was the amount left. In response to a frustrated user who wrote, "It's baffling how much they have and people still buy this shit." XRP shared a chilling stat. Wallets linked to Chris Larsen still hold over 2.81 billion. XRP, worth around $8.4 billion at current prices. Let that sink in. One individual, regardless of his role in Ripple's founding, controls almost 5% of the entire XRP supply, with XRP trading near $3.09 and boasting a market cap of roughly $183 billion. Larsen's holdings alone account for about 4.6% of the total market capitalization. That's not just a number, it's influence, it's pressure, and it's power. The fear isn't just about what has been sold. It's about what could still be sold. Because if even a fraction of that 2.8 billion XRP were dumped onto the market rapidly, the impact could be severe. Liquidity would be strained. Order books would get crushed. Sentiment would nosedive. And this isn't just theoretical. The community has seen this playbook before, with Jed McCaleb, another Ripple co-founder, who offloaded billions of XRP over several years. Though it was done gradually under a structured agreement, the community never fully forgot the feeling of being diluted, even betrayed. So now, as XRP tries to recover from this most recent dump, investors are asking harder questions. Why is so much XRP still under centralized control? Why is this happening during a bull run? And most importantly, what's stopping it from happening again? As blockchain gives us transparency, it also gives us clarity. And that clarity is forcing the XRP community to look in the mirror. Not just at the charts, but at the architecture of power behind the token. Because when one man controls billions, decentralization starts to feel like a myth. And for many, that's the real danger. Not the sell-off, but the reminder that not all coins are created equal. A blockchain transaction quietly confirms that 50 million XRP, worth roughly $175 to $200 million, is being moved from a wallet directly linked to Ripple co-founder Chris Larsen. It's not going to cold storage. It's not being locked up. No, it's being sent straight to centralized exchanges. For veteran investors, this isn't a casual move. It's a warning shot. The sell-off begins. XRP drops 13%, losing momentum as quickly as it gained it. The celebration ends, replaced by fear. And then come the words that hit the hardest on social media platform X. Crypto analyst J. Martin, a respected voice from CryptoQuant, speaks directly to the XRP community. Don't get dumped on. Don't be the exit liquidity. Protect yourself. Exit liquidity. It's a term traders dread, being the one left holding the bag while someone smarter, someone bigger, someone earlier, sells into your enthusiasm. Let's break this down. Larsen's 50 million XRP sale is just the beginning. According to on-chain data, he still holds 2.58 billion XRP, valued at over $8.8 billion. That's roughly 4.6% of XRP's entire market cap. And here's where things get uncomfortable, that if $200 million was just a warm-up, what happens if he decides to dump even 10% of his remaining holdings? That would be a billion-dollar flood into the market, a move that could crush momentum and confidence for weeks or even months. Some investors argue it's his right. After all, Chris Larsen helped build Ripple. He's not new to the game. He's just cashing out like any early builder might. But others see it differently. They see a repeat of Jed McCaleb, another Ripple co-founder who sold billions of XRP over the course of 8 years.